Hello and welcome to Business Television India. You're watching Beyond the Bottom Line and I am Hiral Desai. On this edition, after the kind of boost that we have seen to the logistics space post the implementation of GST, joining us today is a logistic company. We have the founder and chairman of Allcargo Logistics, Mr. Shashi Kiran Shetty. Welcome to the show, Mr. Shetty. To start off with, firstly, GST has come in as a major game changer in terms of where logistics as a business goes. The street is actually excited about it, even from an investment perspective. What do you think is driving this kind of an optimism?
First of all, thank you very much for inviting me. I think GST demonetization, declaring infrastructure status for logistics sector, is really been one of the most advantageous or beneficial to the fragmented, ignored logistic industry all along. I think going forward, this industry is going to significantly benefit because of all these four measures, what I told you, primarily because there's going to be a lot of new opportunities that will emerge, is already emerging. I think logistic as an industry got a focus by investors, by the government, and obviously the industry members who all been demanding a lot of reform in the industry, which is finally coming through. And the whole thing about the demonetization has taken away a lot of the companies who are below the radar now coming into the mainstream. GST is forcing everybody to consolidate their business in terms of their inventory, their finished products, how to strategize in terms of distribution and where the cargo need to be stored. Instead of planning it on the basis of tax, now they have to plan in terms of how to make it more efficient, in terms of how to bring it closer to the market, how to procure and use the opportunities of these large warehouses, which would be facilitated by the whole requirement of the new demand. It's been a perfect storm in a positive way. It's not a storm. Correct. I think it is a kind of a boon for the whole industry. So that's the way the industry is viewing it at this point in time. I think over the short to medium term, when I say short to medium term, from year is short, 2 years maybe short, 5 years is what I call as medium. I think there is going to be a lot of action in the industry. Right. The one other very big change that also is happening in the industry is the technology. There is a lot of new startup companies are coming emerging, and these startup companies are kind of putting pressure on the traditional companies to help them to become more efficient, help them to be innovative, help them to adopt the best practices that the other industries follow, and push many of the industrialists in the segment to invest heavily into technology.
Right. With everything said and done, you spoke about technology as well. What's the update in terms of where the e-way bill is concerned right now?
Yeah. The e-way bill is likely to be implemented in 2 phases. The intercity is going to be from February, and the intracity is expected to be 6 months down the line. And I personally feel the e-way bill will impact only the LTL cargo. Okay. Because that needs multiple movement. They not necessarily move from door to end, right? When I say end to end, city to city, and then it will work on a hub and spoke model. So when you move the cargo from one hub to another location, that is when you have to issue multiple e-way bills. Otherwise, I don't see for a pure FTL truck. Of course, there is a adoption of technology by the transportation companies and by the customers need to follow that process, follow that procedure. But for a full truckload which is going from one location to another location without any transshipment, I don't see there need to be much worry the industry. I think people are sometimes overreacting without understanding the whole scenario. But LTL, definitely people have to work a little bit on streamlining that part.
Right. If you talk in terms of where the Indian logistic market is concerned, various research reports are giving us estimates that it's probably $100 to $125 billion market, which is growing almost at a 5% growth rate per annum. If we talk about Allcargo Logistics currently, what's the kind of market share do you think you hold in the entire logistics space in India, and where do you see it growing from here on over the next 3 to 5 years?
Allcargo, a lot of our business is related to international transportation, not only in and out of India,
Correct.
also internationally. So a small percentage of our business is domestic right now. So that's why our growth will be much faster in the years to come, because the big focus for us now is the domestic market. So I don't want to put a number, because we are still working on our whole strategy. Right. But it's definitely a big focus, and is where we'll invest substantially.
But very rightly, as you're saying that yes, Europe, North America, China,
yes,
these are the major contributors in terms of where Allcargo's business goes.
Yes.
If you could just give us a breakup of how much is domestic and how much is international currently?
No, although Allcargo was formed in India, we started the business from India. Due to our multiple acquisitions, we became a global company. The net contribution in terms of our profitability, still substantial percentage comes from the India business.
Right.
Almost 40-45% comes from India. About 55% comes from international in terms of bottom line. The revenue is completely skewed. Our revenue, 85% comes from international business, and only 15% comes from the domestic business.
And
it's
what's
because
the reason for that?
The reason is because in India we have substantial investment. The business are capital intensive,
right?
And they have high percentage of EBITDA compared to your asset light business. Although the asset light business is giving us a far higher return on capital, whereas the India business is comparatively giving us much lower return on capital.
Correct.
Because there is an asset in terms of container freight stations, in terms of the land bank, in terms of our shipping assets, our handling assets in terms of cranes and hydraulic axles, and all those equipments have taken away a lot of our capital.
Correct.
And they are significantly lower in terms of return on capital. So that's how the business mixture that is there today.
So with your exposure increasing in the domestic market now, if you're going to follow that strategy where you will increase your focus, do we see that mix changing?
It will substantially change in the next 5 years.
Okay.
I think in terms of the capital requirement in terms of for executing our plan in India will always remain substantial compared to the international business. The only difference is in an international business, we are growing organically year on year, and there can be a transformational growth for us if we pursue some of the acquisition opportunities, which is something where we would need capital. But the India business, for us to grow, certainly need more capital, which always, and that will be led by investment on the ground,
right,
in terms of assets and in terms of other requirements for achieving that growth.
Okay. And in terms of the different segments of business as well, currently, multimodal transport, that's MTO, contributes almost highest to your revenues. I think it's almost 80 to 85%, which is followed by a container freight station and then the engineering bit.
Correct.
Currently, with the kind of mix that you have, in the next 3 to 5 years, do you see that mix also changing?
Container freight station business now will grow. Now we having established a container freight station in all the important ports of the country. The next level of investment for us is going to be in logistic parks.
Okay.
And logistic parks are basically, you have the bonded area, that is a container freight station or inland container depot, what we call. And along with that, we will also build private freight terminals where the domestic trains can come into our facility. That is another revenue stream. And also together with that, we'll also build large warehouses.
Right.
Which is something which is it would be a requirement because of the GST.
GST, right.
So these are the three major investments that will happen. And on top of that, we are currently evaluating an opportunity for us to get into the domestic market.
Okay.
When I say getting into the domestic market, we are looking at end-to-end transportation, that is the distribution for B2B and B2C customers.
Okay.
So that is the other area where we would invest in the future.
Right. So obviously your segments will expand then.
Yes.
Your basically 85% of your revenues that come from MTO, that will go ahead and get reduced, and there will be some portion that will probably your CFS will go higher, your end-to-end deliveries will go higher as well.
Yes.
Then how is the revenue mix expected to look like?
Difficult to put a number, but I think it will probably be somewhere in the region of 70% still international business.
Okay.
Because that's a huge opportunity. I mean, that's substantial business out there. And that's something where we'll continue to put our focus on.
Right. Very interesting.
But revenue again is not that critical for us.
Right.
What is important is the margin. Gross profit. The gross profit will come from the India business, because the international business is generally, as I mentioned, low margin but high capital returns. Yeah.
Right. Apart from that, with the GST coming in, you have contract logistic also, which is a major opportunity as we're talking about. And there are estimates saying that post GST, 40% is the kind of growth that is expected in terms of where contract logistic goes. And apart from that, the demand for warehousing is also expected to go up. How big again is an opportunity, for Allcargo in these segments?
Right.
And what's the kind of investments that you will need to make to get, to grab all these opportunities?
Yeah, like I said earlier, warehousing is going to be the mainstay for the logistic industry in the next 5 to 10 years. India need to build massive scale of warehouses to meet the demand of e-commerce growth and the transformation that the supply chain for many industries that will happen.
Right.
So like if you take an example of the auto industry, they are already far advanced in managing their supply chain, right? Just in time. So same concept, many other industries were not in a position to do in the past because of the multiple borders and the fragmented market. So I think most industries would look at outsourcing their supply chain management, and for that to happen, you got to consolidate the requirement of various customers under large warehousing spaces, and it need to have very scientific management of those warehouses.
Correct.
It is not just building a godown.
Right.
It needs a racking system. It need to have a retrieval system. It need to have pick and pack. It will have many other value-added services that need to be provided, and which is not something that everybody can do. It needs that science to understand. You need to implement
it will be capex intensive as well, right?
It's capital intensive and technology intensive. You got to maybe integrate your system with the customers. You have to adopt SAP or many other WMS systems that are available. So you need to adopt all that. So this is going to be very matured, very scientific model. And companies like us really stand to gain out of this opportunity, both in terms of requirement of the warehouses, which we are going to build because we have our own land bank.
Correct.
And secondly, we understand that business very well, and we have the required bandwidth of people, and that is where we are going to be putting a lot of our focus in the next few years.
Right. And as you just mentioned about the land bank, where does the land bank currently stand at?
We are already in JNPT, Chennai, Mundra, Calcutta, and Indore, where our facilities are already operational, and in Dadri.
Okay.
And additionally, we have land in, we're going to be acquiring land. We already signed up in Jajjar, which is outside Delhi. We have, that's about 180 acres. We are in Bangalore with the 100 acres, is already in our possession. We are Hyderabad about 35 acres. And Nagpur we have 60 acres. And we would like to build additional facilities in some of the other important cities like Ahmedabad and Mumbai.
Right, so this 350 acres is still under construction.
Yeah, I mean it will be under construction over the next 5 years. We'll build it over phases.
And what's the kind of capex that you'll require for this?
Approximately about $200 million.
Okay.
About 1,000 crores. Yeah.
And how are you expected to fund all of this then?
We have multiple options. We can raise debt. We can raise equity.
Right.
We can bring a strategic partner. We can bring in a private equity.
Right.
So we could do the funding on the basis of which works out the best in the long-term interest of the company.
Right. So, and out of these, which are the initial ones that will be starting, in terms of getting operational?
Yeah, the first is we'll fund it internally. We have a very good cash flow in the company, and we can, leverage a bit. And as we move forward, we will obviously look at the demand. These are all out there, but we need to really
you have to act accordingly as well.
Exactly. We got to have anchor customers. Right. We got to have a very clear signal that yes, the people are interested, which we are getting today. But we want to see them on paper, and then start
As a logistic company, you do work with different sectors, of business as well. If you could just tell us, how are margin profiles different with the different segments that you operate? Like, for example, if you're working with the auto companies, chemical companies, e-commerce, fashion and retail, which are the ones which are more lucrative in terms of business?
There are no business which are lucrative. We really have to struggle, and margin difference is hardly anything between any industry, irrespective of which industry we get the business from, because there is nothing like a commodity specific rates. The rates are now common across all segments, all industries. Yeah, it is only some difference comes marginal, I would say, when there is a higher volume. If somebody can offer, there is always a little bit of a volume discount that works, but otherwise it is pretty much the same.
Right. Apart from that, if I was just reading something wherein they're saying that the market value of the land bank that you have currently is estimated to be around 500 to 600 crores, which translates to almost a 12 to 14% of the current market capitalization of your company. Once developed, what do you think could be the value of the land parcels?
The land will not be about 500. I think it would be somewhere in the region about 350 crores around.
Correct.
It will be the value of the company, value of the land. I'm talking the undeveloped land.
Undeveloped land.
Yeah, if I take the developed land, it will be more.
Correct.
So the undeveloped land, when they get developed, we put anywhere between $200 million, 1,200 crore. We'll have to wait and watch and see what valuation those assets will have at that time. It's very difficult to predict. But these are all long-term investments. We're hoping to have a better return on capital because of the land what we acquired is already in the books, and we don't have to put that additional money. Obviously, our return should be much higher than the other people who come into these, so that will give us an edge. And we will see. I mean, I think one of the right way to do it is obviously all this will be done in a special purpose vehicles.
Correct.
So we'll see what the investors will value it at the time when we look for some funds.
Right. Apart from that, you have been lightening up your underperforming assets as well in the last 12 to 15 months. How much more to go in terms of a divestment score?
No, I think it all depends on how that business outlook going to be in the next few years. Right now, the equipment rental business is unfortunately a bit of a stress because of the utilization. The primary issue that we face today is, one, there is limited capex in the country, in the private sector, and the some investment which is happening in the windmill sector. So that also got impacted because of the solar prices going low, and discoms demanding a lower price, and most companies are in trouble because of that, all our customers. So they released quite a bit of our equipments, and there is no other option, but I think it is getting revived. So beginning of next month, our utilization will go up to about 70%. So that's very good. And I think it's also when the markets are down, people will not buy assets.
Correct.
Right? So that's the reason we are not in a position to sell some of the assets. But I think 2008, this year onwards, I think definitely from the second quarter, the deployments will be better. I think the demand for equipment will increase because nobody is bringing any more assets. And at the right price, at the right time, we wanting to sell.
Approximately, what's the value of the assets that you are looking to divest currently?
Close to about 100 crore at least.
Okay.
Yeah.
And that will be something that you're looking to divest in 2018 as a year itself?
2018.
Okay.
Yeah, correct.
Apart from that, overall, if you go to see...
and that will also fund our investment in the warehouses.
Investments in, okay.
That's right.
6,500 crores is something that we're looking at in FY18 in terms of revenue.
Yeah.
What's your goal looking like for 2020? Because that's what everyone actually wants to know now.
We, if you look at our track record, barring I think 2017, we have grown almost 15 to 20%.
Correct.
Increase in our revenue and the bottom line, right? If you take in a good market. So I think 2018, everybody is hoping that the investment cycle will begin in the second half of 2018. By then the GST and will all settle down. And basis the economy is growing at 7%, 7.5%. We don't see a big challenge with our capability of achieving organic growth, and also in terms of achieving our value creation through acquisitions.
Right.
Is the strategy of the company to going forward. And if you take a simple 15% growth on what we have today, we should end up with a sizable growth
around
number.
12 to 13,000 crores?
Yeah, I think we should we should be, I hope so.
So
no commitment,
$2 billion company by 2020?
We are going to do our best, but I don't want to commit to any number, as you can understand.
Right. And taking into consideration that yes, that's the aspiration, that you want Allcargo to be a $2 billion company by 2020, with everything said and done, that everything falls in place the way you as a company would plan it. What would be the key challenges that could, refrain you from reaching there?
I think one of the main thing is acquisition.
Okay.
If we don't do acquisitions, it will be hard for us to get there.
Okay.
So having said that, we would do investment in acquisitions only if it creates value.
Right.
We are not an organization who want to invest valuable money into something which doesn't make synergic benefit, or something doesn't create value.
Correct.
Or something that we are not convinced about. So we are very conservative in our approach in that direction. It's very easy to do an acquisition, but it must create value at the end of the day. So that's a policy we always followed, and our focus is on creating a greater return on capital, because that's the end of the day what matters. Size do matter, of course, we all understand that, and we are going to go for size, but with proper planning.
In terms of where your end-to-end deliveries are concerned, that's going to be a business that is expected to grow bigger, with e-commerce also actually growing.
Yes.
How much do you think will be the kind of revenues do you see coming in from this space in the next 3 to 5 years, and what's the kind of investment that you will need to make in whether you do acquisitions or whether you put it as a capex into this business?
Yes.
How much do you think will be required as an investment?
I don't want to give a number unless I'm convinced that that's the right number. We are currently still evaluating our entry strategy to that market. It all depends on how we deploy the resources, how do we deploy the capital, whether we do an organic growth there or we acquire a company. Both options are available. So we are currently in the process of putting a team together, and then really when you're ready we can share that number.
And anything in terms of acquisitions that we could look at in FY18 itself, maybe nothing specific, but anything that as a company that is in your mind that yes, in FY18 we need to close one acquisition.
Most likely it will happen. Most likely in 18 we are going to announce 1 or 2 acquisitions
as well. And very lastly, in terms of where the next 3 to 5 years go, 2 to 3 growth drivers that are going to be aiding the business.
One is our international business, which will organically grow, and like I said, there are acquisition opportunities, so that business will continue to grow. The second one is our logistic park business, where like I said, we're going to continue to make investments, and we believe a lot in this business. And the last one is going to be our contract logistics space, where we will substantially grow in the next 5 years.
Right. And in terms of the logistic park business,
5-10 years.
Right.
Yeah.
In terms of the logistic park business as well, you've already started work on that, right?
Yes.
When do we see it actually operational in terms of the entire park?
Our work has started in Hyderabad, and we're building one more warehouse in JNPT. These two facilities are currently under construction.
Okay.
And Bangalore and Jhajjar should start within the next 6 months.
6 months.
Yeah.
Right. And very lastly, any expectation? We know the government is already doing a lot in terms of logistics as a sector, but any announcements that you're expecting from the budget?
I think what we look for from the government is a consistent trade policy.
Right.
Don't do something and withdraw.
And withdraw it.
Don't do something and change drastically.
Right.
That upset the whole apple cart. So my sincere request to the government is, please follow one path: liberalize, and liberalize.
So liberalization is going to be the way forward.
I think that's my earnest request to the government.
Right.
And keep a lot of attention for the business community, investor community, who's taking a lot of bet on the actions that you have taken, the promises that the government has made.
Correct.
For people to make investment.
Right.
And when you reverse it, you will find NPAs, you will find NPAs,
right.
You will find people going bankrupt, and you will find all sorts of pain, loss of job, everything happens. I think like the business take a long-term view, the government also must take a long-term view. And also the government must implement the law of the land better than how they're implementing today. So there is a fear among the citizens across the country that if you don't follow the rule, you will have a problem.
Right.
So I think that's what the government should do, and we hope that this budget may not be the only time to do it, but
it'll be an ongoing process.
We hope that the budget will give that kind of a signal to the trade in the industry. And I think India has enough entrepreneurship. India's got enough energy and the talent and the wherewithal. I think the India needs is a liberalized governance. Get out of the way, only create policies and make it comparable to the world. So that we have a level playing field with China or America or Europe, right?
Correct.
So we should not be disadvantaged because of the bureaucracy and because of red tape and so those, I think, the hurdles if the government can clear, I think India will prosper. I think the biggest problem we have is unemployment. I think the investments are required to create more jobs, and I think that's where the government should singly focus on.
Right. All right, Mr. Shetty, pleasure speaking to you. So that was the management of Allcargo Logistics actually giving their growth plan ahead and their vision 2020. That's all that we have on this edition of Beyond the Bottom Line. Thanks for watching.